Welcome to this Merrill Corporation webcast titled IFRS and XBRL Financial Reporting with the SEC. My name is Lisa Lasota, and I'm a United States inactive certified public accountant. And I've been working with XBRL and SEC filings for numerous years, and I'm currently working directly with IFRS companies along with the Merrill XBRL team to help them with their SEC filings. Joining us today are two very knowledgeable industry experts, actually, with both XBRL and SEC filings. The first person is Lou Roman, who is Vice President of XBRL Services at Merrill Corporation. He is the chair of the XBRL U.S. Data Quality Committee and an active member of the IFRS Taxonomy Consultative Group and FASB's Taxonomy Advisory Group. Lou brings significant practicality to XBRL that companies find refreshing and beneficial. Second is Bartek Chaika, Director of XBRL Consulting Services, also at Merrill Corporation. Bartek was the lead XBRL individual at the IFRS Foundation in charge of the IFRS taxonomy over the last 7 years. Bartek now works closely with the SEC registrants to do XBRL the right way, providing his unparalleled knowledge of accounting, XBRL, and lastly, the IFRS taxonomy. A couple of logistics before we go ahead and get started. If you have any questions today during the webinar, please feel free to submit them via the chat function, and we'll do our best to try to answer as many as we can. Also, please watch for a very brief survey. If you could take a couple minutes to complete that, we would certainly appreciate that. And lastly, all attendees will receive a copy of the presentation and a replay link shortly after the presentation via the email. So a couple of other things that we're going to discuss today is observations of the recent XBRL filings, the quality of XBRL, the ways to improve XBRL, what are the risks and potential consequences, and finally, upcoming changes for the next year that filers need to be aware of. So let's start with observations of the first IFRS tax filings that have been recently submitted to the SEC.
The first thing I observed, and what I've heard others seeing and saying, is that the rate of extension seems quite high. And by extensions, I mean when a company creates their own tag because there is no applicable tag in the IFRS taxonomy. So it's hard to pinpoint what an applicable rate is of extensions or what is a high rate of extensions. But it seems it's higher than what we're seeing in the U.S. for U.S. GAAP filings. And there's a lot of data from U.S. GAAP filings, so that kind of becomes the benchmark. The SEC did an analysis of extensions, and for the 2014, 2015, and 2016 annual reports, they did an analysis to show what the extension rates are on those. And if you look at the graph that's on the slide, on the far right are 3 bars that show all filers. So if you look at those 3 way to the right, that's 2014, 2015, and 2016. And the extension rate is 20%, 19%, and 19%. So that kind of becomes what we think is normal, and start looking at that. The IFRS filings that I'm seeing are actually higher than that. So that's why I think it seems high. And I think when all is said and done in the first filings, it's going to be quite a bit higher than the 20%. That 20% is really irrelevant for the IFRS filers. The IFRS filers, it's a different reporting standard, different reporting going on completely. So let's not use that as the benchmark, but it is what I see that people are seeing and saying about these XBRL filings.
So why is the extension rate higher for IFRS filers versus US GAAP filers?
Well, I think there's a number of good reasons why the extension rate is higher, and I do agree. I've been seeing the higher extension rate as well. I think the first and main reason is that the IFRS standards are principle-based standards. So the accounting standards themselves allow or even encourage preparers to present their own distinct situation, to tell their story. And therefore, you're not going to find IFRS taxonomy elements that are that company specific. The second reason is the size of the IFRS taxonomy, which, as you both know, I think is about 1/3 of the size of the US GAAP taxonomy. So not all the disclosures that are covered in the US GAAP taxonomy will be covered in the IFRS taxonomy. Having said that, the IFRS team always aims to cover all the disclosures that are required by the IFRS standards. It's those disclosures that are voluntary that are not covered by the IFRS taxonomy. And finally, the IFRS taxonomy is not built with the SEC in mind. so it does not have to follow the SEC rules and regulations. And there's a number of examples how that comes into play. One of these is, for example, the table text blocks. So the SEC requires each table, each physical table in a filing, to be tagged with its separate table text block. And while the IFRS taxonomy does have table text blocks for each table that is in the actual IFRS taxonomy, it does not aim to cover all the potential tables that might be found in IFRS financial statements. Another example is also some specific element types that are used by the SEC and the FASB that are not used in the IFRS taxonomy. And one example here is the disclosures expressed in days, months, and years. And they use the separate type that's called duration item type. And that type is simply not used in the IFRS taxonomy. Therefore, to express that information in XBRL, IFRS filers have to create extensions. Having said all that, I think one important note I should make is that the IFRS taxonomy team is always keen on receiving comments from the public, so from yourselves. And if you have any ideas how to improve the IFRS taxonomy, what to change in the IFRS taxonomy, do feel free to contact the IFRS taxonomy team directly, and I'm pretty sure they will be happy about each and every comment they receive.
Yeah, they've been very open about receiving that type of input.
Yeah.
So in addition to the high extension rate, are there any other observations?
I think definitely one that could potentially be a bigger issue and a more concerning issue is the quality of the XBRL. Unfortunately, we are seeing errors in the XBRL filing, more than I'd like to see. This is information being submitted to the SEC, but I think the filer is unaware of a lot of these errors. They don't know that they're there. But for the most part, there are errors in a large percentage of the files we've looked at. It's concerning. What we did look at, of all the filings that have come in so far, we've looked at many of them. Of course, not all of them, because that would take an inordinate amount of time. But we've looked at a lot of them, and we're seeing these errors. It is concerning. We're not just doing an automated look with software. We're actually putting human effort into examining these files to see what's really in there.
So are the errors due to problems with the IFRS taxonomy or the preparers?
Preparers. These definitely are issues and problems and errors created by the preparers. It's a situation, like I said, where they're unaware that the error exists, but more so it's a situation where they don't know what they don't know. And when that's the case, you usually move forward without knowing that you're doing something that isn't correct.
So could the IFRS taxonomy be configured to eliminate some of these errors?
Well, I don't really think so, to be honest. As Lou said, these errors are mostly preparer errors. So it would be extremely difficult to change or configure the IFRS taxonomy in a way so that those errors would be avoided. Actually, I think you can divide the errors into two groups. And one of the groups is the technical errors. And this is the group where you can relatively easily eliminate the errors or decrease the amount of the errors. For example, you have the Edgar filing manual that you can follow, and if you follow its rules, your XBRL will have less errors or no errors. There's also XBRL validation that is now available in every software you use. So no matter what kind of software, you can usually run a check, and that will validate the XBRL against the XBRL specification. There are also some other checks that can be run, and the data quality rules from the US are one thing. They recently have been enhanced to also involve some rules that apply to IFRS, so you can use that. And also the IFRS Foundation publishes what they call the XBRL formula ring base. And that formula also checks for errors in your filings. So if you do run that, that should limit the errors, the technical errors that you have in your XBRL. Having said that, one important thing is to ask your service providers, if you're using the service provider, what type of validations they run. Because if you make sure that they run a lot, then your quality of XBRL will get better. The second group of errors that's much harder to get rid of, these are the content errors.
Yeah, the type of errors that we're talking about, I want to give the audience a quick example of two of them so that you understand what we mean when we say there's an error in the XBRL. The first one, which you see on the slide here, the intended meaning in the annual report was as follows. The fair value of the net assets acquired in the business combination was $2.5 billion. The way they tagged that gave erroneous meaning if you had read similar communication in the XBRL, such that erroneously it said the fair value of the total consideration transferred for the business combination was $2.5 billion. So much different meaning, because they're basically saying that number is what we paid for the acquisition, which is not what they meant to say. A second example, quick example here, the intended meaning in the annual report was that 98% of revenue from silver concentrate sales, one of their products, was from 4 customers, total 167 million. Erroneously, by the way they tagged it, they're telling the reader of the financials in the XBRL that 99% of total revenue was from silver concentrate sales. And if mathematically, that would have been 719 million. So by the way they tagged it, it's really telling an analyst or any reader of that XBRL financial information that something different than what they meant to say. I do want to say that what we're talking about today and the errors that we're bringing up are common errors. They are not outliers. They are things that we're seeing that are relatively pervasive throughout the files that we've checked. So they are errors that we're concerned about and we want to make you aware of. I think in many cases, the filer is very unaware of these errors, and it's creating unintended consequences for what they're saying to the public. Interestingly, I've talked to some people that have filed these types of filings, and a common thing that's said back to me is, well, I don't have any of these types of errors. Do I? In other words, you can tell there's a lack of confidence in exactly what they filed and submitted to the SEC, and that's unfortunate. I got another comment from somebody that said, we didn't intentionally make those errors, and had I known about those errors, we would have not filed that with the SEC. Again, it tells you the seriousness of what's happening with some of these errors, in that it's publicly provided to the SEC. So we've taken all the errors that we've seen and looked at them. We've actually categorized them into different areas. So go ahead.
Yeah. So you will see on the slide the groups of errors that we came up with. And I think the first and the most important one is the incorrect sign, so incorrect debit or credit value. And the result of such an error is that you actually report in XBRL a value that is exactly opposite to the value you have in your paper financials. So the magnitude of the error is very significant. The second group is the incorrect tag selection, where you have selected a tag that does not convey the same information as your paper financials do. Thirdly, we have a lot of unnecessary extensions where the filer or the service provider just does not realize that there is an appropriate tag in the IFRS taxonomy. Maybe it's placed somewhere else in the IFRS taxonomy that you would expect, but you just miss it. And therefore you create an entity-specific tag, an entity-specific element, which should just be a normal IFRS taxonomy tag. We also have a number of tagging omissions that we see, where a number is simply not tagged. And the SEC does require you to tag each and every number in your financials. Therefore, even if the number is expressed as text, so if you say 12 in text, it also should be tagged as a number in XBRL. And that's something that some people don't know, and they just omit the tag and don't tag this information. We also have a number of improper combinations of an axis and a member, and that's a bit more technical. I think we will show some examples later on. And finally, we have a lack of calculation or incorrect calculations. And also, the SEC does require you to include a calculation, an XBRL calculation, every time 2 or more numbers calculate in your financials. And some people don't know that, some omit that, and then they get a calculation error.
Right, so within those categories, let's take a look at some specific errors that fit into those categories. And these are errors that have been filed with the SEC in the last few months with these IFRS XBRL filings. The first one, which you'll see on the slide on your screen, the intended meaning in the annual report was the current year tax expense was $275 million, very common disclosure. The way they tagged it erroneously in the XBRL said that the current year tax benefit was $275 million. So what they did is they entered that $275 million into the XBRL with the wrong sign on it, the wrong positive and negative sign, thereby saying much different than what they planned to say in the XBRL. Here's another one. The deferred tax income was $1.6 billion. Erroneously, the way they tagged that was telling the reader of the XBRL that the deferred tax expense was $1.6 billion. And again, this is a common error, and I've seen that especially with these tags, but it's simply because the positive negative sign is flipped, and that tells something different.
So I'm going to pause here because this is really important. So in that case, there was a deferred tax income on the EDGAR filing to the SEC, but yet the opposite was reported for XBRL. So you have XBRL does not equal the EDGAR in this case.
Exactly, and that's a major problem because one of the basic key fundamental rules is the XBRL tagged information should communicate the same thing that the paper-based traditional financial statements communicate. And in this case, exact opposite, and it's unfortunate, it really is. And like I said, sometimes they're unaware that this even happened.
Okay, so this sounds like it's a great variety of the type of errors. So why are they really happening?
I've got, to fill in some more of these categories, let me go on to a couple more errors here. And one is that incorrect tag selection, which Bartek mentioned. As you see on the screen, the carrying value of the derivatives is $3.3 billion. And that was the intended meaning in the annual report. Erroneously, the way it was tagged, the notional amount of derivatives is $3.3 billion. So they meant to tag the carrying value, or maybe they didn't understand the accounting concepts that were sitting there and what that number meant, because it was written in a paragraph, and they erroneously tagged this the notional amount tag. So incorrect tag selection telling the reader something completely different than what was meant. Definitely a knowledgeable XBRL individual was not involved with this filing, or especially in this situation. Another one, and this is the unnecessary extension category that Bartek talked about. In the annual report, the amount of the deferred tax asset that pertains to Canada was $35.9 million. Erroneously in the XBRL, they're telling the reader that the amount of the deferred tax asset that pertains to a country that is not on the list of standard countries was $35.9 million. So instead of using the Canada member to put on that tag, which is in the country code taxonomy, it's there, they didn't find or didn't know about that and created an extension or a unique tag for Canada, thereby saying, we're not telling you really what country this is. And unfortunately, then when this company gets compared to other companies that have Canadian operations, that's not going to stack up. It won't be comparable. And very unfortunate. But again, no knowledgeable XBRL individual was involved with tagging that one. Here's another one on the screen which says, talks about the proceeds from an offering. This is in a note to the financial statements. The total proceeds here from this offering were $80 million. And you can see it's made up of two parts. As tagged, however, we show that that 80 million, apparently, well, it did get tagged wrong. 80 million got tagged with a certain tag, and then the European placement, private placement member or descriptor was put on that tag to say that 80 million was for the European private placement. And we know here that in actuality, that was only 2 million, not 80 million. One further thing about this that's troubling is that the total proceeds are not tagged in the XBRL because that tag didn't get applied properly and used. So you don't know from looking at this in the XBRL what the total proceeds were from this offering. And again, that's unfortunate, but I think what's more unfortunate is an analyst is going to come in and say, well, the total proceeds are the two numbers on the right there, if they're using the XBRL, and they're going to come up to about 157 million as the total proceeds when they do their math and add those two numbers. So this one goes in a bad direction in many different ways because they use an improper member here in this tagging. One more here is that the amount was not tagged. It's one of the Bartek categories that he talked about. The intended meaning. Company may prepay the principal with a prepayment premium of between 15% and 40% of the amount prepaid. Well, they didn't tag either of those two amounts, and the SEC says you must tag individually and separately those amounts. So the erroneous meaning in the XBRL basically was no information was provided about the amount of a prepayment premium. And again, that isn't what the traditional paper-based financial said, so there's a problem here. For all these errors that I've talked about here, and they are real errors, it's obvious to me the filer did not have a knowledgeable XBRL individual involved with the filing, and well, especially with these tagging of these notes to help out. So that becomes a problem that unfortunately has been happening too much.
Okay. So these XBRL errors are resulting in incorrect financial information being reported to the SEC.
Yes.
Okay. So why are these errors happening?
I understand the challenge that the financial reporting person is going through. I mean, it's new. XBRL is new. It's a learning process. It's the very first filing with XBRL. And you know what? They're focusing more on the traditional paper-based financial statements. That's what they're used to, and they want to make sure those get right. And I think less attention gets put on the XBRL in many cases. As the date is approaching for filing, you know, my XBRL is okay, and as the date gets closer, I think it's okay. I've been looking at it some. Date's getting really close. It must be okay. It's probably okay. I hope the date is here to file. Let's file it. So you can tell there's a lot more attention being given to the paper-based financials. That whole confidence level being more and much higher with the paper-based financials than the confidence level that the XBRL is correct is really causing a conflict today in many financial reporting departments. And some of you may feel that, and I think it's the reason for a lot of these errors that we're seeing. So that's why that's happening. The key reasons, we've taken all these errors and tried to look at why is this happening, what are the key reasons, and we've come up with a list of those reasons.
Yeah, and the first reason on our list, and again, this is the most important one, I think, it's lack of technical knowledge, and by that I mean obviously XBRL, because that's the language that is being used, but also the lack of knowledge of the IFRS taxonomy. It's a specific taxonomy, it has its modeling techniques, its structures, so you do need to be aware of that and be quite knowledgeable in that. And also it's the SEC rules knowledge, and by that I mean the Edgar Filing Manual, as well as the SEC staff interpretations and observations. And funny enough, many people don't even know those interpretations and observations exist, and yet they should be taken into account when filing your XBRL with the SEC. The second reason, almost equally as important, is the accounting knowledge. And I know that those of you viewing this webinar probably have a lot of IFRS knowledge if you're responsible for the IFRS reporting at your company. But in particular, if you're using a service provider, that's an important check that you should make with your service provider to make sure that your service provider is your partner not only when talking XBRL and the IFRS taxonomy, but also when simply talking about the accounting, so the IFRS accounting standards.
I think another reason for these errors is over-reliance on software. I've talked to many filers, and kind of a mantra of, well, the software works, and therefore it must be doing everything right, and everything must be tagged right and be happening right. That obviously is not the case. Software can only go so far. I think of all the sphere of things that could go wrong in XBRL, I think software probably handles this small spot within that sphere. And it's unfortunate because people rely on the software, and validation is good and proper, and we need to do all of the validations, but there's oftentimes a sense of comfort that, oh, I've done my validation, it passes the SEC gateway. I think it's, it must be good, but much, much, much the opposite, as we know.
Exactly, and because of that over-reliance of software, quite often not enough time and resource is placed on reviewing the XBRL and making sure the XBRL is right. It's not a push of a button. Still, a knowledgeable person needs to sit down, take a look, review, check the tags, and to make sure the XBRL is good quality.
Yeah. In addition to that, sometimes there's just a low care factor at the company, meaning the attitude toward the XBRL isn't that serious, and close counts, which we know it doesn't with XBRL. And sometimes that comes from the top of the financial organization, unfortunately, that attitude and maybe the lack of resources you talked about, but not vetting what's there, not aware of the consequences of filing bad XBRL is part of that too, and then just thinking that we're good enough. With all these reasons for errors, they happen. I do want to say that on the other end of the spectrum, we've seen some good filings. I've looked at plenty that have been done right, not enough, but some. It is not an insurmountable task to the XBRL right, as proven by those who get it right. I will say the biggest bank in Spain, which has very complex financials, has excellent XBRL. I've looked at a portion of it. I couldn't look at all of it because it's very large. But the portion I looked at, very clean, error-free financial tagging. And I'm impressed by that. What's really interesting about that is this company, this biggest bank in Spain, has what I'll say is the most complex financials of all the IFRS XBRL filers that are submitting to the SEC right now. If they're not the top, they're in the top 3 or 4 of complexity, yet they're doing it right, and they figured out a way. So I'm impressed with that. It shows that it's a doable task with the right factors that we were talking about that reduce those errors. So that's what's going on with why it's happening.
So these common errors that you are seeing, is there any correlation between these errors and certain factors present in these registrants' financials, such as are they unique to a certain industry or size company or even a specific region?
Well, I don't really think so, to be honest. I think we haven't seen that much correlation with size, with market capitalization, with geography. I think what we've seen is a lot of correlation with the approach to tagging and the approach to XBRL as such. And the first thing on that list is the approach to choosing the service provider, if a company is using a service provider. So if the company does take the time, does analyze the offers, then their quality is much better. And the second thing on the list is the internal time and resource spent on the XBRL, on the review of the XBRL. There needs to be some resource that is dedicated to reviewing the XBRL. Because even if you have the best service provider, the service provider is not your accountant. They might not know exactly what each line in your financial statement means, and therefore they will need your advice and guidance to get the XBRL right.
Thank you, Bartek. I appreciate that. So we've talked about observations and we talked about errors. Let's switch gears now to consequences. So why should these registrants care? What's the ramifications of having that XBRL data being different than the traditional paper filing? Not even different, but the opposite, incorrect.
I think the big issue is that the use of XBRL is increasing significantly. Even from 2 to 3 years ago, it's changed dramatically. And that's where that matters. There are consequences. The SEC itself is a power user of XBRL. It's very surprising when you find out more and more and more about what they're doing with it. Data aggregators. Guess what? Bloomberg, the big data aggregator, told us they started using XBRL back in, it was Q3 of 2015, and they've been using it ever since with every quarter as they aggregate information and put it out there. So also analysts, both large and small, at both ends of the spectrum, are using and analyzing the XBRL data now. They've told us that many individuals that purchase a service that provides financial information, actually, the person purchasing it doesn't know, but many times that information is coming and sourced from XBRL data. It's just that they don't know that. You talk about consequence. When you put this all together and the use of it and what's going on, I see 3 different risks that companies need to know about when they're submitting XBRL. One of them is simply the SEC risk, if the SEC is using it. A second one is the legal liability that pertains to it. And then a third one is the reputational risk that is there for every filer. So those 3 are key that filers need to know about.
Okay, so we're talking about 3 different kind of risks with filings in the SEC. Can you take a minute to explain those a bit more?
Sure. I'll take the first one. The first one is the SEC risk. And the SEC is using new software, and they're creating software where they've vastly increased their use of XBRL data. We know that. Commissioner Pivovar even said that with new forms that are produced, they always take a look at those to say, should this data be put into XBRL data as opposed to just the paper-based format? And with revisions to the forms, they're doing the same thing. So if an old form gets revised, hey, let's look at it to see if XBRL should be attached to that. And it tells you where they're going with it. They're potentially looking at more requirements for XBRL for SEC data.
So is the SEC going to do anything about for XBRL quality?
I don't know I'm not the SEC, so I don't know the answer to that specifically, but given the internal use at the SEC, and I know they're making phone calls to companies that are not compliant as well, and they told us they see the errors that are coming in. They're seeing now, wow, look at this. So as a financial reporting person, whatever the answer is, I'm not taking that risk that they very well may be doing something. The risk just does not justify the rewards of handing in for XBRL. 3 years ago, consumption was a lot less, and so that risk was lower. But that's all changed now. It's truly a game changer. I would have never advised even 3 years ago that someone hand in XBRL that's of low quality, but the risk now is a lot higher than it was before of doing that.
Absolutely. And actually, it's not only about the SEC risk, it's about legal risk in general. So initially, there was a period where there was a limited liability for your XBRL filings, but that's not the case anymore since 2014. So now your paper financials and your XBRL financials, they carry the exact same risk. And that means that if a data aggregator uses your XBRL financials or an investor uses your XBRL financials, and if they make a wrong investment decision based on an error in your XBRL filings, they can even use legal action against you.
So the third one that I mentioned is reputational risk, and we've seen analysts, users of the XBRL, get up at conferences and talk about what's going on, and they will publicly tell which companies produce the bad XBRL that's actually not helping, it's harming their analysis. So watch out for those types of things. The companies that are non-compliant are getting more publicly talked about. Another thing with the reputation is that if you file an XBRL error, it does stay there. It's not like, well, next time you file and that prior error goes away. Rather, if you produce an XBRL error 3 years ago, let's say someone's doing a 5-year look-back analysis where they're trending your financial statements, that error you made 3 years ago is sitting there in that trend analysis as an error. So it stays there. The errors that are being made today that we're talking about, they were made within the last 2 months. Guess what? They're not only there today, 5 years from now, when someone does a 5-year look-back analysis, those errors are going to be in there. So for 5 years in that case, that error doesn't go away. So there's a reputation for the financial reporting person that produced that error, that it's sitting there. I've got a quote I'll read from a job posting, and it says, the controller is responsible for the integrity and accuracy of the SEC filings, including financial statements and related footnotes, MD&A, and XBRL schedules. So the controller that took this specific job, who's part of the filings we've been talking about, really isn't even filling that job description for that end piece. But something to think about. It really may have impact. I was listening to a CPA firm's webcast within the last month, and one thing they were talking about situations, and it wasn't about XBRL, but they said if there is a problem, the controller's the one who's going to get the phone call. So if there are controllers listening today, obviously, you understand that. But this also applies to external financial reporting people that are working with the XBRL, as well as all the way up to the CFO. There is a reputational risk to producing bad quality information to the SEC that's sitting there, publicly.
So we've talked about quality and the related risks and potential consequences. What exactly is XBRL quality?
That's something that I would say there's nothing sitting out there defined as what it is. I'll tell you what it is right now. It's really properly complying with the SEC and the XBRL rules and regulations and their guidelines. And then it's also communicating the same thing in the XBRL tagged information as what's in the traditional paper-based financials. So that's what quality is. But given that, none of you can take that away and use it. So let's break that down into what I'll call 7 components of XBRL quality, which actually is something that you'll be able to use. So on your screen in the slides, you'll see the 7 components of quality. Let's start with, at the bottom, the first component, which is XBRL specification 2.1. It's at the bottom because that's the foundation of all of XBRL. Don't worry if you don't understand what it is, because fortunately every software that produces XBRL takes care of XBRL spec 2.1. So you're covered on that one. The second of the 7 quality components is the Edgar Filer Manual rules. You need to comply with those rules to have good quality. Section 6 of the EFM is what talks about XBRL, Chapter 6. So interestingly, the EFM, if you've ever tried to read it, is not very readable. There's a lot of technical language in it, and it doesn't take very long into it that you go, wow. So careful on that one. The third of the 7 XBRL components for quality is accounting disclosures. And most of you on this webcast will say, well, I understand accounting disclosures. I'm good at accounting. But does the person who tagged your financials, is that person good at accounting? Because what we see happen so often, someone who's not good at accounting tags the financials expecting the reviewer who is good at accounting to fix their problems or make the adjustments as needed. The person reviewing doesn't understand the original thought going into the tagging without the accounting knowledge, and the two never meet. Seen that over and over and over. So make sure you have that accounting knowledge there and in the proper places. The fourth of the 7 items is the IFRS taxonomy. There is no substitute for familiarity with the IFRS taxonomy. It is important to know it, understand it, to be able to tag financial statements properly. It changes every year, so there are updates as well to it. Item number 5 of the 7 components is the IFRS Foundation's Taxonomy Preparer's Guide. Fortunately, this one's very readable. It gives a good guide to tagging, and everybody who tags IFRS financial statements or is involved with them should really read this Preparer's Guide. It's a good one. The IFRS Foundation also puts out other guidance throughout time, and so keep up to date with that as well. The 6th component of the 7 is that you need to comply with the SEC's staff observations and FAQs. It is a requirement to have good quality. I talked to a lot of filers, or at least some filers, that say, I didn't know these existed. What are they? And that's unfortunate, but if you have not heard of them, they're on the SEC's website, and they're very key to understanding, to getting XBRL right. A lot of them are interpretations of the Edgar Filer Manual rules, so further clarification. These SEC observations and FAQs are very easy to read, very practical and understandable. The 7 of the 7 components is the XBRL US Data Quality Committee rules. So Bartek talked about these briefly. These are rules that you can run your file against prior to filing, and they'll tell you for certain automated things whether you are in compliance or not. There's only a handful of IFRS rules today that are approved for these DQC rules, but in the next 12 months or maybe sooner, we're going to have a lot more rules that we're pouring into there and approving. So it'll help filers before they file to check their filings. So I took these 7 components, which are the things that you can actually do something about to make sure your XBRL quality is good, and I gave them the red, yellow, green stoplight effect, meaning if they're red, they are harder to comply with, and if they're green, they're easier to comply with. And here's what it is. If you look at this on the screen, there are 2 red items, the IFRS taxonomy and the Edgar Filer Manual. Tough to comply with without a little bit of help and knowledge. And the easier ones, there's 2 greens on there as well. So the point about all this is, if you want to get good XBRL, here's the 7 components. Look at each one of them, do an assessment. Say to yourself, do I have this one covered? Yes, I've got this one covered, this one covered. Oh, I do not have this one covered. And then do something about the one you don't have covered. Get help, get learning, find out more about it, make sure you do have it covered. Those are the keys to XBRL quality.
Lou, thank you for that great explanation of what XBRL quality really means. So how does a filer really improve their XBRL filing, and which enables them to move forward confidently?
Well, I think the first thing on the list should be what Lou exactly just said, the 7 components. So you need to understand the 7 components, and you need to address the 7 components. And by that, I don't necessarily mean you have to address them yourself. You might use a service provider So you need to take the decision how much of that you need to insource and how much of that you need to outsource. Secondly, I think always a very knowledgeable XBRL person needs to be involved. And by that, I don't mean only XBRL, I mean also the SEC rules, the IFRS taxonomy, and the IFRS accounting standards. Only if a person has all that, then it can make sure that the quality of your XBRL is right. And should you decide to go for an external help, please do take your time choosing the service provider. That's one of the most important decisions on the way to getting your XBRL right. So take the time and make sure you get it right. Also, when you do prepare your filing, after you prepared it, take the time and run all the validations, or ask your service provider to run all the validations and share the results with you. Those validations will make sure that you get the technicality of the XBRL right. And finally, I think you need to understand the consequences. So you need to take the time, think what might happen if you get the XBRL wrong, what Lou has been talking about before. That's also an important factor on the way to getting it right.
Yep. You talked about the software, and I was thinking about it. There's some programs out there that will tell you the quality of your XBRL filing by running software on the filing. Just word of caution that a comprehensive look at XBRL quality takes more than software. It can help you understand certain parts and pieces, but it really takes human involvement and an understanding to look at the XBRL files to really get a comprehensive look at quality. And for those on the webcast that are concerned about the XBRL that may have been filed, reach out, try to find help to maybe even analyze that, assess it to see what might be in your filing.
Thanks so much for that explanation. At this point, let's actually pause. We've been having a lot of questions come in. So let me pick a couple questions here. So let's do this one, number one. Doesn't every company have errors in their XBRL filing?
Well, I'll answer that not if they have a knowledgeable XBRL individual involved, because if they do, those aren't going to happen. And the benchmark, it isn't, the benchmark is proper communication through tag data. It's not benchmark against someone else who did a poor job of submitting their XBRL.
Okay. Let's look at another one. So what happened with the first filings of the US GAAP XBRL financials? Did they have errors? Weren't there problems with those?
There were some, but in the U.S. we started with face financial statements first for the first year, so SEC eased it in. And they also had a limited liability period for the first number of years to ease it in as well. So the errors didn't have quite as much risk impact, I'll say that. But now that limited liability is gone, it's not there for the IFRS filers. So that being the case, I think it's a different scenario from US GAAPs to the IFRS filings.
Okay. Another question. What should I do if I identify errors in my XBRL filing that's already been submitted to the SEC?
Let me take that.
Sure.
Well, first of all, we cannot give you legal advice. So the most important thing is talk to your legal counsel and decide on the action. Having said that, usually there are two methods. So you either file an amended filing, or you correct the error in next year's filing. However, whichever of the two will be applicable in your case, I think the most important thing is that you fix the root cause of the error so that that error doesn't happen again in the future. It's not enough to fix the error that you have already made. You should make sure that you don't make the same mistakes again.
Makes sense. Let's do one more. This is a very hot topic. Will the XBRL ever need to be audited by an outside party?
Probably another one for me,
Go
being a
ahead.
former auditor. Well, it's an open question, Lisa, at the moment. I don't think anyone really knows what will happen. Personally, I think XBRL will be audited at some point, or at least some form of assurance over the XBRL will be necessary. As soon as the XBRL use increases, and it will over time, then the data aggregators, the users, they all have to trust the XBRL data. And to make sure you can trust the XBRL data, the best way is to have some assurance over it, some external assurance over it. Whether it will be an audit assignment, an audit review, or some agreed upon procedures. So what's the level of assurance? I don't know, but I think there will be some assurance definitely in the nearest future.
Yeah, what's interesting, all three of us are prior auditors, and I'll speak myself. I agree with you. I think there will be, for that exact reason, a day in the future where there's some level of assurance on that, on the XBRL.
You know, at this point, let's switch gears. We've talked about observations and what we've seen with current filings. Let's talk about the future, some of the upcoming changes. We know that next year's tagging is going to require a lot more than just a quick update. It's unfortunately not simply a press of the button. It's going to take a lot of thoughtful process and changes to both tagging and structure. Can you explain why this is the case?
Well, definitely there will be not enough to push a button. First of all, the IFRS taxonomy changes. So it's a living organism. Every year, the IFRS Foundation changes something to the taxonomy, adds new items, for example, to reflect what is commonly reported in actual IFRS financial statements. Also, they make improvements to the taxonomy. So the more use there is of the taxonomy, they know that some improvements need to be made, and they make those improvements. The second thing is the accounting, obviously. So, for example, for 2018, we have two big standards coming in, which is IFRS 9 financial instruments and IFRS 15 revenue from contracts with customers. And these standards carry a lot of disclosures. So preparers will have to amend their financial statements, their paper financials. And obviously, as soon as you put new things into your paper financials, you will need to adjust, amend, or add to the tagging that you've done in XBRL. So it's not easy. You have to spend some time mapping those new disclosures in XBRL. Talking about that, it's not only about 2018. 2019 we will have IFRS 16 leases, and then 2021 we will have the new standard for insurance contracts. So all insurers will be impacted by a number of new disclosures.
That's a lot. I mean, what you said there is more than probably even a normal year, but I'm going to add to that actually. Inline XBRL is something that is likely coming. The SEC proposed a rule to say the format of inline XBRL is going to be mandated. Rule hasn't been voted on and passed yet, but what it will do is change the format of handing in the XBRL. It used to be handing a paper copy and the XBRL files over here. Those two come together, so that HTML copy comes together with the XBRL, the Form 1. It's a good idea, but it does change the format. It's something that filers may need to adjust for. Another one, completely separate thing, is that the SEC has put out and passed, approved what they call the SEC reporting taxonomy, the SRT. That taxonomy, the impact for an IFRS filer is now you go to the IFRS taxonomy, you find the tags that are there. Now you'll also, if you can't find tags there, go over to this SRT taxonomy, which will be a source of more tags that you can select. So generally what's in there is the typical SEC-specific disclosures, but there are other things in there that it will impact how you pick tags here forward. I've got another one too. It's the data quality rules that we've talked a little bit about, but as I said, there's going to be a lot more IFRS rules in the data quality committee rules and guidance, and therefore IFRS filers should, before they file, run their files up against those rules, and it's free of charge to do that, to see what things pop out and what things might need attention.
And I have one more thing to add, not for all our viewers, but for those who are European or at least listed in Europe. There is a new mandate coming up. That's the ESMA, so the European Securities and Markets Authority mandate, and that will be relevant for financial statements from 2020, and that will require also tagging in XBRL. So if you are filing your consolidated financial statements in Europe, then you will have to add XBRL to it as well.
That's everything we've talked about for upcoming changes. It's a lot. It's a lot more than a normal year. I will say that. It's going to take a lot of remapping and a lot of thought put into it. Not just software, like you said, pushing a button or just running something. It's going to take a bit of work. So those are the upcoming changes.
Well, thanks for that description. And at this point, let's summarize. I mean, we'd like to dive deeper. There's a lot to talk about, but that's all we can really cover in 1 hour. So in closing, I'd like to get some summary remarks. So Bartek and Luke, can you summarize?
The IFRS, given all these observations, the IFRS XBRL, in my opinion, is going to take more focus than what was given to it. And remember those 3 risks, especially when thinking about how much focus to give it. SEC risk, legal liability risk, and reputational risk. They're all very real things.
Absolutely, and don't underestimate the time, the resources, the effort you have to make yourself to get your XBRL right. So choose the software provider if you don't want to do it yourself, but then allow for time to review, to correct the XBRL. And in particular, next year in 2018, when all those new accounting standards come into play, make sure you have enough time and resource to make sure you get the XBRL right.
Summarizing as well from a very practical standpoint, remember those 7 components of quality and look at each one of them and truly do an assessment for each one to say, I've got it covered, right? Don't have it covered, and go forward accordingly. The goal is to file the XBRL in a very competent manner. So for any of the items that we've talked about today that you're interested in or want more information about, please contact us. Contact Bartek, contact Lisa, contact myself, or if you know a representative of Merrill Corporation, contact them as well.
Thank you, Lou. Well, that concludes the time that we have for today. Bartek and Lou, thank you so much for taking time to discuss these things with us. Your observations and insights and explaining what's coming from the future is very, very valuable. So a couple other logistics before we end today. Just quick reminders. So slides available now for download via the resource widget. And secondly, a link to the webinar replay will be emailed within around 48 hours. And lastly, don't forget about that quick survey. We'd really appreciate it if you take a couple of minutes out. Again, thank you so much.